Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more of what John writes on a regular basis, you could head directly to www.incomeinvestors.com. There, you could also sign up for our free reports that get mailed directly to your inbox. Thanks to record demand, crude oil prices could be hitting an intra-quarter high of $100 per barrel in fourth quarter of this year. Surging oil prices and record demand coupled with storage of very large crude carriers, not a single VLCC will be delivered in 2024. This should result in exceptionally strong long-haul rates and record VLCC profits in 2024 and 2025. Those are the perfect industry tailwinds for today's top income pick, DHT Holdings Inc., traded on New York Stock Exchange under symbol DHT. John?
Thanks, Mo. You're correct. DHT Holdings Inc. is an independent crude oil tanker company with an international fleet consisting of 24 crude oil tankers in the VLCC segment. Each of those ocean behemoths can transport 2 million barrels of oil. Not surprisingly, DHT Holdings stock took a hit in the early part of 2020 as the coronavirus pandemic shattered much of the global economy. But it wasn't all bad for crude oil stocks. Oil was still being pumped from the ground and needed to be shipped and stored. This actually ended up being a boon for crude supertankers. In March 2020, VLCCs were earning like a massive $279,259 per day. That's the second highest level since 1990. Instead of transporting unloading crude over a set period of time, VLCCs were basically used for floating storage and sat idly day after day. Now, while time charter equivalent or TCE rates, and that's the daily earnings or losses for ship owners, they fluctuated during the pandemic from being sky high to low to at times actually being negative. The TCE rates have moderated since then, but with tanker earnings expected to increase in the 24-25 period. This will, of course, be great for DHT Holdings.
How did this company do in the most recent quarter when it comes to financial performance?
For the second quarter ended June 30th, DHT announced that shipping revenue increased 53% year over year and 15.5% sequentially to $152 million. Adjusted net revenue grew 108% year over year and 20% quarter over quarter to roughly $113 million. They reported second quarter net income of $57 million or 35 cents per share compared to $10 million or 6 cents per share in the same period last year and $38 million or 23% per share in the prior quarter. Adjusted EBITDA, meanwhile, was up 176% at $89.9 million on an annual basis and up 25% on a quarterly basis. In the second quarter, the company reported a combined TCE rate of 56,300 per day, and that's more than double the 24,300 per day in the second quarter of last year. Now, the second quarter 2023 rates included 36,200 per day for the VLCC's on-time charter and 64,800 per day for the company's VLCC operating in the spot market. Now, TCE rates only have meaning when tied to a shipping company's break-even rate. There's no point bragging about a $200,000 per day TCE rate if the break-even cost is $225,000 per day. Fortunately, DHT has robust break-even rates of $19,200 per day for time charter and $15,400 per day for spot prices.
I read that in the second quarter of 2023, the company's payout jumped to 35 cents per share.
Yeah. Now, DHT, like many energy stocks, the quarterly dividend or monthly dividend, depending on the company, will fluctuate based on TC rates and earnings. During the pandemic, the company's distribution actually increased dramatically, but came down to earth in 2021 and 2022. But it's been a different story in 2023. Record consumption, demand, and strong TC rates are helping juice DHT's dividend again. In the second quarter of 2023, it declared a dividend of 35 cents per share or $1 on an annual basis for a yield of 9.91%. Again, current inflation rate is 3.1%. And now this marks the 54th consecutive quarterly cash dividend that it's paid, and it's in line with the company's capital allocation policy, which is to pay out 100% of net income. That 35-cent quarterly dividend also represents a huge increase over the 4 cents per share it paid out in the second quarter of 2022 and 23 cents per share paid out in the first quarter of 2023. Now, in addition to a frothy high-yield dividend, DHT also returned value to shareholders in the form of share buybacks. In the second quarter, it purchased around 1.07 million of its own shares in the open market for an aggregate consideration of around $8.9 million. at an average price of $8.25 per share, and it retired all those shares after it acquired them.
DHT stock is up 20% in 2023, but it still has a lot of room to run.
Yeah, and we've actually been following DHT Holding for a while now. The last time we looked at DHT was actually way back in 2021, and it was trading at $5.06 per share. Now that price is adjusted for dividends, etc. This past March, it hit an intraday high of $11.38, its highest trading range since around 2011. So that represents a 2.5-year gain of 125%. More recently, DHT Holdings Stock has actually been doing quite well over the last couple of years, up 107% since the start of 2022, up 23% over the last 3 months, 21% year to date, and actually up an impressive 37% year over year. Now, Wall Street analysts think DHT stock has more room to run, with a 12-month median forecast of $12.50 per share and a high estimate of $17 per share.
All right, John, thank you so much for your analysis. DHT Holdings Inc. is a leading independent crude oil tanker company. It is ranked 6 out of 64 shipping giants and ranks #1 among crude oil tankers in the recently released 2023 ESG scorecard report issued by Weber Research. It's a financially robust company that is expanding its fleet and is taking full advantage of a strong industry tailwinds. It reported strong second quarter results. Its stock is thumping the broader market, and it recently increases dividend for the 54th consecutive quarters. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.